Okay, so this is exercise 12-8. So we had a patent that was purchased from Ford Company for $2 million on January 1st. Carter estimated the remaining useful life of the patent to be 10 years. The patent was carried on Ford's accounting records at a net book value of $2 million. Doesn't matter. What matters is when we buy it, it's what did we pay for it. So during 2020, a franchise was purchased from Polo Company for $480,000. In addition, 5% of revenue from the franchise must be paid to Polo. Revenue from the franchise was $2.5 million. Carter estimates the useful life of the franchise to be 10 years and takes a full year amortization and a year of purchase. Okay, so that's fine. We can deal with that in a second. So, and then we have Carter incurred R&D costs as follows. So Carter estimates that these costs will be recouped by December 31st, 2023. The materials and equipment purchased have no alternative uses. January 1st, because of recent events in the field, Carter estimates that the remaining life of the patent purchased on January 1st, 2019 is only 5 years from January 1st, 2020. Okay, so we got a few things going on here. Let's do the easy part first. The R&D costs, those are not going to be intangible assets. Rather, what we would be doing is we'd be saying over here, these would be essentially be related to various different, we would just call this research and development cost. And this would be $433,000. Okay. So for the patent, there's two things going on here. So for my patent, I bought it on 1/1/19 for $2 million. And at that point in time, I thought it was going to be used for 10 years. Now, the amortization expense for 2019 is going to be $200,000. However, in 2020, I now said that my patent is only going to be for 5 years from January 1st, 2020. So my new amortizable base on the patent would be the acquisition cost for the $2 million. My 2019 amortization expense of $200,000. So my new amortizable base is going to be $1.8 million. So the amount of my amortization expense for 2020 is going to be 1.8 million divided by 5, or this is going to be $360,000. So on my balance sheet for the patent, this is going to be a patent is an intangible asset. So on my balance sheet, I'm basically going to have a patent of 2 million less accumulated amortization. My accumulated amortization on the patent is going to be 360 plus 200, gives me my patent net of 1,440,000. This is what would be showing up on my balance sheet. Now, as far as the amortization expense goes for 2020, okay, I'm going to have my amortization expense on the patent, and this here is going to be for 2020, it's going to be 360 grand. Okay, so there we go. That is my patent. Okay, so during 2020, a franchise was purchased. A franchise is also a form of an intangible asset. Remember, an intangible asset is one without substance, but it's giving us rights. So over here, when I have an intangible asset, so I got 480,000. I'm expecting this to last for 10 years. So over here, in terms of my patent, or see my so my franchise has a book value, or basically I paid $480 for it because I bought it in 2020 and I took a full year's amortization. Or amortization expense. My franchise net is going to be $432,000. On my income statement, this is going to be over here, a franchise fee or franchise amortization expense. And this here will be $48,000. Now, the other thing that I'm going to also have here as well is that if I also have over here is that related to this franchise, I also have an expense, and this here is going to be based on sales. So the other part on my income statement related to this franchise is I had sales of 2.5 million. And I have to pay 5% of that amount to Polo. So over here, this would basically be showing up as a $125,000 franchise fee. So I have my franchise amortization, and then I have my franchise fees. For $125,000. So on my income statement, the total amount I'm being hit with is going to be $966,000. The important thing to also remember about this too, if I was to do a statement of cash flows, these would all be add backs because these are not impacted by cash. Whereas this one is part of like a franchise fee. That's what I have to go through and pay. So that is exercise 12-8. Hope you enjoyed that one, and I'll see you on the next video. Have a great one.